Welcome to this month's Market Update. I'm joined today by Casey Lowe, Principal Consultant with Frontier Advisors. Hi there, Casey.
Wayne.
Interest rates, of course, continue to be an important topic, and central banks clearly have an important role to play there. Talk us through some of the developments in the world of central banks over the last month or so.
Yes. So, the Reserve Bank of Australia is now working under the new schedule. So they no longer meet monthly. The next meeting is scheduled for late March. But that's around the same time as when the US Federal Reserve will be meeting as well. But the European Central Bank has met, and they've left the interest rate unchanged at 4%. But I think the key takeaway from that meeting was that they've updated the inflation forecast for this year, and they've actually reduced it. So the market has taken that as a signal that the interest rate cycle at least in Europe has likely peaked, and that the European Central Bank is likely to be thinking about rate cuts for later this year.
In terms of other key meetings, of course, China, a major economy, as we all know, they've had some important policy development meetings in the last few weeks, haven't they?
That's right. So the authorities in China they're going through the annual, what they call two sessions meetings, which happens around early to mid-March every year. And that's when the National People's Congress and also the top advisory body for the government meets to set the growth targets, so the key economic goals for the upcoming year. So one of the key policies they look at, or the market focuses on, is the economic GDP growth target that they set every year. For this year, they've set it as 5%, which the market has found to expect it to be quite an ambitious target.
Yes.
And that means that the authorities in China will likely have to provide more stimulus over the course of the year in order to achieve that 5% target. And that's largely because the property sector in China, which accounts for about a third of GDP growth, remains quite weak. And when we look at household confidence in terms of buying new housing, that also remains very low. So one of the indicators that we track is the weekly property transaction volumes figures, and they are still about 40% below the average before the government started to crack down on debt and leverage in the property sector. So confidence in that area is still very weak.
Yes. So continuing that theme around the challenges around weak growth, two major economies around the world, the UK and Japan, have got some challenges in that area, don't they?
Yes. So, the UK is in technical recession. So, 2 quarters of negative GDP growth. And that's been driven by 3 things. Household consumption is weak there, driven by the cost of living crisis in the UK, but also globally and also locally in Australia. Government consumption has also been weak, and trade is also particularly challenged for the UK too. So this makes the Bank of England's job more challenged because, inflation remains sticky in the UK. It's staying around 4% currently. It's not really coming down any further. So that means that even if the Bank of England wants to cut rates to support growth, they can't really build that stickiness in inflation. So that's causing a bit of issues there. And then we turn our mind to Japan. So even though the Japanese economy is larger than it was 12 months ago, the 2 most recent quarters, at least initially, was reporting negative growth, so technical recession. But they've come out and revised up the latest quarter's figures now. So they're technically no longer in recession, but the key takeaway is still that growth is starting to look a bit more challenged in Japan as well.
Yeah.
Driven by 2 parts. The first one is household consumption there is also being challenged, but business investments is also weak there too. So linking to central banks in Japan, the Bank of Japan's job has also been made quite difficult just because inflation was getting to a point where they were quite comfortable with to start to hike interest rates there now. But because growth is starting to weaken, they may actually have to keep interest rates low just to support growth there. So the economic environment in Japan is actually quite different from the rest of the world because Bank of Japan is actually thinking about hiking rates while the rest of the world is thinking about when would they cut rates.
So a lot to focus on. Thank you for that analysis, Casey. And thanks for watching this month's Market Update.